Hello and welcome to another edition of Triangle Investor Interviews. I'm your host Lucian Valkovic, and in today's edition, we are joined by Kasper Rasmussen, my dear friend and excellent, my go-to technical analysis guy. Kasper, great to have you back. Thanks for coming.
Yeah, thank you, Lucian. And as we just talked about just before we went live here, we've been talking for like 3, 4, maybe not 5 years, but close to. And we have been a part of each of our journeys. So again, it's amazing to be back here on your show, and thank you for having me.
Thank you very much and congrats on all your success. You are doing a wonderful job. I really want to say that you are my technical go-to guy. So I'm calling all my viewers to have a look at Kasper's work. He's doing really brilliant job. By the way, how can they reach out to you?
Yeah, thank you for asking. My Substack is uselink.inv, and that's where I put out daily videos on what I see and what I'm trying to do and position and how I see the markets are moving and trying to navigate these very wild times as we have just seen the past week here. So uselink INV on Substack is where you want to look for if you want to see more. So.
Okay. Before we dive into the charts, I want to hear your view, your comments. So just like you said on the wild times, actually, we have a roller coaster stock
Yeah.
market. How are you digesting this roller coaster? Do you hold your positions or you trade this volatility in some way?
I don't trade it. I basically hold my positions because I think, yes, we are seeing a lot of short-term volatility here, uh, due to, in my opinion, yes, we're hearing tariffs, back and forth, but in my opinion, it is the bond market that is the big, uh, economical atomic bomb that could set off, and that is you start to see the jittering in that bond market again. But I'm very confident that, again, gold and gold miners specifically also will do insanely well. I think the charts will back it up. And we're also going to look into the SIL here in just a minute here, that the silver miners, I know it sounds strange to many reasons because normally silver miners, they do nothing and it's just hurting people for a long time. But we could be on the verge of a major technical breakout that should send this tiny market into a lot higher prices if we get the breakout and it holds. So that
Yeah.
is where I am. So
Yeah, agreed. But where are you putting your money directly? Which sectors are your investments?
it is precious metals mostly and energy, in uranium still, even though it has been underperforming quite big here in 2024. But typically, when you see the gold silver ratio starting to drop, you see the silver miners, gold miners, basically the entire mining industry, but also energy do really well. And we are at like 110 in the gold silver ratio, so very high. And we should at some point start to come down from there, and then you will see the mining sector really do amazing things.
Yeah, I would like to start with silver. I really
Mhm.
like silver, and I believe that is very undervalued at the moment, just like you. I believe that I saw that silver ratio is, correct me if I'm wrong, back below 100 today. In my
Oh yeah,
opinion,
yeah, that's true. That's true. Yeah.
yeah, in my opinion, silver should really move higher. However, my experience and the past tells me it's not that simple when it comes to silver. What are the charts telling? Well, maybe we should cover, like you said, Global X Silver Miners ETF first.
Yes, let's do that. I will quickly share the screen here and let me know if everything is fine.
Yeah, it started.
Cool. We can start with the SIL. So, unfortunately, this only goes back 15 years. I would have wished it to be able to go back to like the start of 2000, the year 2000, when actually we had the last bull market in gold and silver. But anyways, in my opinion, here we have a 15-year. Remember, 15 years. It's not like a few days or weeks. This is
Mhm.
15 years of wedge pattern going on. And you can see here, again, these are the points that is making this big, large fractal. And in my opinion, once we start to break 42, that is when you break this 15-year wedge.
Mhm.
And also when the silver miners are going to do even better than it has done for the past year. Because a year ago, when gold broke out of that 2000 and 75, that is also when we saw the first breakage of actually, in my opinion, the start of that whole precious metals bull market.
Mhm.
And you can also see here internally, we had a 3-year breakout of the silver miners, and now we're waiting for the big one, the big wedge pattern breakout, which happens at roughly 42,
Mhm.
and we stand at 41. So we only need like 2.5% more in order to really get things going in the silver miners.
Yeah, how is the upside looking? I know if we break this level, just like you said, what are the charts telling you about the potential of the upside?
Yeah, I mean that's why I would have loved to have the previous run up because then you can start to do the measures. But
Okay.
but again, here, in my opinion, my first target. Again, this is in the shorter term. I think longer term we have way more to go.
Yeah.
But the initial pop here should send us to 54 roughly,
Okay.
because you have a big horizontal resistance at that point in time.
Mhm.
But I think we will stall there, maybe pull back, but also later down the road, we are going to see the 2011 highs get hit. So these are my first two major targets. Um, and then we shall see. I wish I had more to do the momentum from the 2000s to
Okay.
measure from, but for now, that is my targets. And depending on what happens there, then we will definitely start to look for more upside. Um, and remember, even though it doesn't sound like a lot here, if we start to break, we have a 100% move in the ETFs.
Yeah.
Um, if you go to the SILJ, which is the juniors, there are some stocks there that will do 10x, 20x easily upon this move here because they are so small and they are very leveraged to the silver price. So they can do way more than 100%.
Wow.
But even 100% in it is still a massive gain if you play the big silver miners by itself.
100% in the markets like this is a jackpot,
Yeah,
actually.
yeah, it is.
Yeah. Yeah.
It's
Great.
it's incredible. Again, it won't happen tomorrow or in
Of
like a week
course.
or a month again. It takes some time. Remember, we're talking a 15-year wedge. So again, it will take a year or two or three, depending,
Sure.
to get there. But yeah. So
Sure. Sure. Kasper Gold had a beautiful run. Is it time for a breather? Let's cover maybe GTX. How is the chart looking there?
I mean, to me, again here, the GDX actually broke out of that 2011 high uh, back in 2024. So it actually broke out before the silver miners, which is, in my opinion, about to break out now. So you can see here we broke that long-term trend line coming down, and we did a back test, a little deep, but fair enough. And now we're rallying higher. And to me, the obvious target again, of course, there will be pullbacks, on a shorter time frame, but the longer-term view here is clearly we're gonna see the 2011 high getting hit, and we're only like 30% away. Um, so that to me is a major magnet for now. And also we have a beautiful uptrend channel here that is actually starting from
Mhm.
basically 10 years ago. So that is the main system that the GDX is in right now. So I expect 30% here, before we see any major resistances coming in.
Yeah. Yeah. Looks good. Let's move on. Maybe uranium. What is hiding there? Any surprises? What is your crystal ball, or better to say, crystal charts telling you?
Yeah, it's again uranium. Again, if you were to tell me in the start of 2024 that the entire uranium, especially the miners, were going to be cut in half, I would have said that's never going to happen. But that is what we saw happen. And you can see here we are kind of stuck, you can say, within that whole, a bit of an upslope on the channel, but we're basically stuck within that 4-year channel. And we basically hit big double support here last week,
Mhm.
and we saw a good initial reaction. So what I'm looking for here for the URA is actually to clear this horizontal level here in the short term. So roughly 22, 23 on URA, getting back above there, and then we are in a much more, at least short-term, bullish state for the miners. But they have definitely been taking a huge punch to the face there in 2024, especially with that whole DeepSeek news, because we actually had a very nice breakout 2 days before, and then we had the DeepSeek, basically the AI sector dropped like I think 10% that day, and uranium is somewhat linked again narrative-wise to AI. So I think URA also dropped like 10% or 15% that day. So that was a huge momentum loss, and ever since we've basically been coming down.
Yeah.
But we have been buying there on the Substack, right there at that little double support. So hopefully it holds, and in the future it turns out to be a good entry.
Yeah, definitely. Kasper, let's put things in the context and try to cover some ratios for
Yeah,
those
exactly.
we covered. I know that you are expert with those. Give me some ratios, please, to understand things better.
Yeah. I'm first off, if I want to show you, so I will make a little bit of a connection here between the ratios.
Sure.
So here we have a long term, very, very long term. This is gold divided by inflation, the CPI, which is the numbers that the states are giving you. But I can assure you the CPI you can easily multiply by 2 to get the real number. Also remember, before we go into detail, that gold on average does like 8%, 10%. That is actually your true overall inflation when you account for everything that the markets are doing. So again, the government says that we have like 2, 3, 4%. But again, gold is telling you that the real number is, at least 2 times more. So anyways, that's a different topic. This is gold divided by inflation. And what we are seeing here, again, if we zoom way out, we are talking a 50-year
Mhm.
cup and handle, actually very, very textbook cup and handle. And going back to that March 2024, like 1 year ago, where you started to see the miners do well, you're starting to see gold, silver move. You can actually see that is the point where gold broke out of its 45-year cup and handle pattern.
Mhm.
And basically, ever since, gold has been the perfect inflation hedge. And therefore, also, when we're talking 5, 10 years out, people say that gold has run a lot here. Yeah, sure, it has. It has run like 50% in a year, which is massive.
Yeah.
But in relation to inflation, we are just getting started, in my opinion. Again, remember, we looked at the 15-year wedge on the SIL. This is roughly 50 years. So again, to say that gold has run its course after 1 year of breaking out, to me, that is, again, yes, we will have pullbacks and all that good stuff. But to me, if you have a roughly 50-year breakout, you should at least run for like 5 to 10 years after the breakout. And actually, the measured move from this pattern here points to roughly 50 in this ratio, and we are now at roughly 10, meaning gold, in my opinion, over the next 10 years should outperform inflation by a factor of 5.
Hmm.
And remember, we will be in a period there where inflation will be high. It will not be, according to the data, 2%, 3%. It's
Yeah.
more like, like 5, 6% maybe. And gold will outperform those numbers. So that is, again, it is gold's time to shine over the next decade here by far.
Yeah, definitely. It looks like that.
Yeah. And also, if you go on to to gold divided by the SPX here, again, huge turning point happened here like a few months ago, where we actually took out the 2011 high here all the way down, and we're finally also breaking out versus the SPX. So the broader markets, gold is even outperforming that now as we speak. Um, Again, you saw the last time that happened was in 2006, where gold also did like a 5-year move here. So I fully expect gold to outperform the markets until we hit that big resistance from up here, where we will take a breather and then we will most likely push through. Because what's often happens when you have a major resistance or support is that you tag it for the third time, then you pull back and then you go. And that's when you have your full, you know, gold outperformance by basically everything. You have a 45-year breakout against the markets as well.
Mhm.
So yeah, gold looks really, really good in relation to the SPX, the broader markets. When you measure it on a very long-term time frame, this is monthly candles. and we have just broken out. So
Yeah.
so yeah, the long-term trend is definitely in favor of gold. Definitely.
Great. Kasper, I got a few questions just before we hit the record button. If we can cover, Jens Heister wants to know the charts about oil. Is it going up or down?
Oil, we can check to oil. Yeah, sure. Let's do that. So oil, again, very, very sensitive to news and all this jittery stuff that has happened. But we will start with the big picture, and that is the 2008 highs here. Very clean trend line, resistance. And again, then we had the COVID, basically where we saw oil went to zero and even negative on some charts, right? Negative 35 or like 40. And then we had a massive, massive run up in oil. And what happened ever since we peaked in 2022 is we did this wedge pattern here. And that is what everyone was watching. And actually, we can see here very clean consolidation here, very, very tight volatility. You can see the volatility is getting less and less and less. We actually had a breakout here, which turned out to be a false breakout. And what happens often when you have a false breakout of important patterns is you go to the other side of the pattern, which we did. And then we had, what happened like 2 weeks ago with all the terror things. And that basically made us break down from that wedge pattern only to retest or test the long-term trend again. So basically, as long as this hold, there shouldn't be any collapse on the horizon. But again, if you're a bull, you really, really much want to reclaim that trend line. And you can also see here, this is basically the price action from April that we have actually starting to form an inverted head and shoulders. So if we can break that upper neckline here, then we should push back in because the target is then 72. So big moment here comes when you retest, which you often do. Will it be a retest and then rolling over? Maybe. But again, for now, it's still a big fight here short term to not drop below that 55 and collapse. But if we do that, it is basically, what we have seen in the past few weeks, that has accelerated, and we are going to see that big oil dump. So I know many people are calling for the crash, but I'm not quite there yet. To me, this was just a major, major retest again of that 20-year trend line on oil.
Okay.
So let's see how it progresses here. But this is the thing to look for now on the short-term time frames.
Sure. Three more questions. Mark wants to know if you can say what do you think about Valaris chart? The ticker is VAL.
Yeah, I know that one as well. Valaris Limited right here,
Yes.
I think. Yeah. Again, this is a beautiful, a good, lesson what can happen if you have a false breakout at very important moments, because Valaris looked really, really good at that point in time when it finally broke out from that wedge pattern where you almost had a flat top. So typically you break out from that, which we did, and then you can see we have basically been collapsing ever since. There is a saying that from false breakout comes huge reversals, and I think that is a very, very clear sign that is definitely the case. So, and actually, also we also call the long here, and often what you do is you have your stop below. So we did also buy into that and got stopped out. So again, that is a huge technical dump here. You can say like 60% down. So again, what we're seeing now here could be, again, it's still a bit too early in my opinion, but it could be that we are making that correct that three hump before you start to cool down. So I don't have any big patterns going on right now for Valaris. I think it needs to unwind the huge amount of momentum that has been created here, and then we shall see. But right now, I don't have any, technicals for it. So.
Understood. Mark from Switzerland wants to know what do you think about Western uranium and vanadium chart?
It's the WUC, right?
WUC, yeah.
Yeah, exactly. It's been a while since I've been looking into that. So let's have a look here. So yeah, you can just see for 10 years it has basically done nothing, right? It's very much range bound to say here. Bit of a messy one here. It's trying to find support at these lows here, trying to. So for now, it still looks a little bit shaky, especially with that whole expanding volatility here at the end. So I think a lot of uncertainty here for the VUC, and I don't see any patterns right here that I normally try to get into. I much rather like this one over here, where you're basically, having a compression in volatility, whereas now you have a expanding volatility, and these are a lot more difficult to trade here, and to get right, in my opinion. If we do like that, you can see the expanding volatility, and that is very difficult to get right, in my opinion. These are a lot more easy to do. So again, I can't give a clear answer, in my opinion, because of this whole thing here. So and personally, if in the uranium space, I think there are a lot more clear charts if you want to nail like an entry. Again, I don't know the fundamentals of Western uranium, so again, I cannot say anything about that. But I will say until it starts to basically regain that very clean trend line, actually, this one here, until then, it might be better just to be on the sidelines and see what happens. It needs to break that in order to get the more bullish outlook.
Yeah. Final one, Myrad Uranium, another uranium name. Barry wants to know, what do you think about that chart?
Yeah, Myrad, if I can pronounce it. Do you remember the ticker?
Yeah, it's M on Canadian Stock Exchange.
Just M. Yeah. Okay.
Yeah.
Cool. Yeah.
Second one. Yeah.
Yeah. I have to go to the Heikin Nashi because it's very, very thinly traded. So it's been a while since I've been looking at it, and I had some stuff going on here, you can say. But for now, it's again, sometimes it's also just enough to say that I don't really know, because it's a very small market cap, I think, right? Yeah, 16 million. That's very, very, very tiny. So I will say this, though. The only thing I can say is that we are at big, big, big support, and that needs to hold. Otherwise, we might see a lot more downside. So you can see here that is a level that needs to hold. That's basically all I can say for this very, very thinly traded stock here, because if I go to normal candles, you can see it's basically, it's not a lot of orders that is getting done during the day. So if you can hold here, then it has an okay outlook. But anything below like 25 cents, and you are actually coming into some support here, that's okay. I'll change my statement here. We are at big double support here. So if you want to get in,
now is the time.
Now is the time, but you have to have your stop at like 23 cents if you want to play with the stop. Because if you lose these two supports, then we're definitely going to see all-time lows more or less down here. So yeah, actually good thing that you mentioned it, because that is big double support. But remember to have a stop loss in place, because you don't want to be in a stock that drops like 40%. At that point in time, you don't want to be in that. So
sure. Let's wrap it up with this chart. You can stop screen sharing. Kasper, as always, brilliant chat. We always learned a lot from your charts, and we will continue to do so. So thank you very much for this interview. And let's announce part 2 or part 3 in, let's say, 2 weeks, if you agree.
Let's do it. I mean, having these 30-minute talks is very great, and I'm happy to talk to your audience. And I know that when they listen to you and your channel, that they are well informed within gold, silver, uranium, and all that, because you do a great job with your guests. So it's a pleasure to be here.